Alright, this is Biggie Smalls on 6/22/2024. Today I'm going to be explaining to you how DFE went from this final YOLO post in April of 2021 of 200,000 shares, 800,000 shares post-split equivalent with $3.5 million in cash to his most recent YOLO update on Superstonk on June 2nd of 5 million shares and 120,000 calls. I'm going to also be walking through the cycles that he was either intentionally or unintentionally playing on, and why those cycles are even a possibility based off of potential market manipulation from market makers. I want to preface this entire conversation here with the fact that I don't think Ryan Cohen or DFE have any type of communication. I don't think they're communicating at all. I think, if anything, what GameStop or Ryan Cohen does is what DFV ultimately needs to take into consideration and either pivot his tactic or take a new approach. And I'll kind of explain all of that along the way. So I'll start out by saying what happened back in December of 2020, I think is really important to kind of hone in on here. So if we go back to December of 2020, in this window of time, this is where Ryan Cohen is starting to accumulate his position of 9,001,000 shares, above 10% of the company. This is also where he announces his letter to the board. You see weird trading patterns in times of where he's actually purchasing shares where the stock is going down. And I think this is important to kind of outline here, that it seems that when he is purchasing shares, and it's pretty abnormal to purchase, 5+% more of a company, to see the stock go down during those trading days. In my opinion, that is a market maker internalizing a trade for various reasons, um, and hoping that they can release it over the next 35 days or find locates. I don't think this is them technically trying to manipulate where price goes, but more or less control where volume and options are in the general market. And so I think this theme right here is extremely important to hone in on, because I think Roaring Kitty realized this, and over the last 3 years he has been potentially testing this theory about, if a market maker internalizes my trade, what are the ramifications of that, and what are the cycles that play out over the 35-day window where they actually have to make things do. In the 35-day window rule, I'm referring to SEC Rule 204. That allows market makers to use 35 calendar days from the initial trade date to potentially either tactically fail to deliver or shuffle those shares around, but ultimately at the end of 35 days, they need to make that obligation whole, and they are able to internalize it along that time. So I'm going to go over here and just start with how I went through this, reverse engineering what potentially could have happened. And what I did was I basically said, what happens if these big spikes were roughly 35 days prior to a kickoff of an FTE cycle? So I'm assuming that these are both spikes, or both of these spikes are the end of 35-day settlement cycles, and I was trying to look through to find potential anomalies along the way, that could either create a pattern or maybe we're missing something. And I really wanted to figure this out because I felt like it was odd that Ryan Cohen did an ATM after the price had ran up here, and then he did an ATM during the peak of a price here. Um, and I kind of want to say that I think if any, prudent CFO in capital markets was looking at this, if they had a business that was potentially break even to struggling and they were trying to find new ways to grow the business, invest either M&A track or potentially on the path of just growing the company organically by investing in the current platform, you'd want opportunities to potentially sell shares because you think it's going to be creative for your shareholders in the long run. So I think what they're doing is simply saying, on a 5-day trailing average, which is very common, if volume is high enough, you're going to want to sell shares because you have a chance of selling those shares into a large volume like environment. versus back here where you see just a few million shares trading every single day, regardless of the price is going up or down. You know, a 25 or a 40 million or a 75 million ATM could be extremely problematic as it shows that your shares are or your stock is fairly illiquid and it could have catastrophic impacts to your price, which is the last thing anyone would want to happen during a dilution or an ATM. So let's just keep that in mind. But kind of going through, I went backwards and said, are these peaks over here 35-day cycles? And can I find any sort of potential pattern along the way? And I ended up finding something actually quite interesting. So I'm going to pull up this kind of map here that I have starting on April 1st. And assuming that these yellow areas are the 35-day target after a cycle starts, I found some interesting anomalies along the way on the 13-day in particular. And in the gray is also weekend and holiday, so non-trading days. So what I found is that if you line these cycles up, interestingly enough, the 13-day falls right before the 35th day here. And I found that quite odd to say the least. So I wanted to see, well, what happened back at this 13 day, because there seems to be an overlap here, potentially. What could have happened back here on the 13th day? And this is where I went through unusual whales to see the option activity, to see if anything were to happen here, not knowing that I think potentially DFV could have entered into calls at this time. So I'm going to kind of pivot over to unusual whales real quick and show you the option feed. This is April 1st through April 5th, and I'm sorting it by 500 plus size contracts. So this is a purchase of 500 or more contracts at any given strike throughout the day. And this is a normal week for GameStop. You know, you see some large contracts here and there, but nothing too crazy. And if we go to the second week of April, and I'll just kind of show you how normal this is, it's kind of split. You don't see any odd anomalies. You see pretty much everything pop up here that is similar to the prior weeks. And on these weeks, we're also trading, you know, fairly low volume along the way. But then you see something very, very interesting occur as we kind of go to this 13-day mark, specifically on the 24th. It just so happens that it perfectly times up, and I'm just going to skip to the 24th and the 26th. You see an absolutely absurd amount of calls purchased in 5,000 blocks, which is the exact same blocks that DFE was purchasing, the famous $20 in the money calls that everyone was curious about who was potentially purchasing those. And this goes on and on and on of 1,000 blocks at this given time. And if you add it all up, it's to the tune of about $2 to $3 million in potential contracts purchased when the stock was trading, um, you know, just about at the dang near the bottom of, we're trading 2 to 3 million shares a day, in this range at $10 a share. And you can see where these contracts were purchased. He's whoever's purchasing these is 5/17 and 5/24 expiration dates. These are fairly short dated calls given that they were purchased at the end of April here, and they're all purchased at, you know, mainly sub $1 for most of these contracts. So these are purchased insanely cheap. Um, and a mass amount of them are acquired along the way. So I, based off of these buying patterns, kind of assumed that this was DFV, as this is a very similar buying pattern of 5,000 chunk contracts or 1,000 chunk contracts that he purchased, infamously on 520 through 524 during the first ATM. So in the event that this did occur here and this was him purchasing these calls, he holds them, and we actually see something really interesting happen with the stock during this time of him purchasing them. The stock barely goes up, and he is dang near bought the entire option chain, and we've only ran 20% at this point. And I think this is potentially him, knowing that not only he's in the win on this, but something happened back here. If you go back for a little bit more, and assuming that this first peak was a 35-day cycle, that I think he might have purchased a small chunk of shares, which at the time we were trading a few million shares a day. This could have been a very large chunk considering how liquid GameStop was at the time. Um, and he probably saw his position internalized, and it didn't really move the stock. And the theory here is that over these next days, if the stock trades flat, still in low volume, I think there's a high likelihood that a market maker has internalized his trade and does not let that trade be released into the open market. Because you would see at least potentially, 10 to 20% run for a large chunk of this nature. So that's his cue here to say, hey, we might be in a cycle. I'm going to buy as many calls as I can, specifically targeting this date right here. All of his expirations are 517 and 524 basically of what he's purchasing. And interestingly enough, right about this date right here, which I want to focus on, is the 22nd, and this comes more into line later down the road. Um, sorry, one sec. So if we go down to this date right here of the 22nd day potentially of this cycle where he might have purchased shares, um, you see something interesting happen in the option market. So those contracts that were purchased, literally no activity occurs on them. And then around this time, you see a mix of a few things. You see some selling of the 1,000 blocks, and he's selling these at massive gains. He was buying these anywhere from 10 cents to 40 cents, and acquiring a good amount of capital here. But he's also buying more calls at this level, and he's starting to buy the 621 contracts at $20 to $30, which is way out of the money comparatively to where we're trading at this time. Whoops, apologies. I'm going to go back. I went a little too far here. This is actually 424. He's potentially selling at 5.3. So ignore what I just said there. Apologies. So we're going to go to end of May here. And this is where you see some potential activity of him selling those contracts. So you see some contracts being sold here, but you also see him purchasing more calls at this level. And again, these are all out of the money calls that he's purchasing along the way here. So my thought is that what he did was he actually unloaded some of these calls in this range and purchased shares to create another cycle here. And right about this time where he was selling and buying these calls, it kind of lines up perfectly um, with the fact that this is the 22nd day of a cycle that he could have created potentially in 412. And again, he's not really creating this cycle. This is a market maker induced cycle, and he's just playing off of their manipulation, would be my guess here. So, kind of fast forwarding here to this first spike right here, what you see, sure as shit, right before this 35 days hits, what does he do? We're going to go to, sorry, May 15th and 16th. You see a massive amount of 1,000 block calls being sold. This is him unloading his entire position here at the end of a cycle that he knew, obviously very confidently, was in the works because of what his option position did and what potentially his share purchase did back here. You don't see much impact from his option purchase, and you don't see much impact from his share purchase potentially. And the theory here is that this might move the stock 10 to 20%, this purchase, once it's actually released by the market maker. But if you release that when someone's also built a giant gamma ramp, what causes this run now is no longer the FTDs, but what causes this run is a gamma squeeze. And if we run into these calls that start going in the money, the stock is going to run because these options are in the money. And so at this point down here, in my opinion, this $200,000 or potentially 200,000 shares that were purchased kind of have much smaller impact to what's occurring. And this is now a gamma squeeze, and he owns the option chain and basically holds the kill switch on letting this squeeze stop by selling his calls, which he ultimately sells them all during this window to the tune of about $200 million plus in profit, which lines up quite nicely with kind of his newfound position at this point of potentially how he got all of this money along the way. And sorry, it was actually I think closer to like 100 to 150 million dollars in profit that he made off of this run here. But still, a measly like $2 to $3 million invested into calls turned into 100 million plus in about 2 weeks. Um, so kind of going off of this theory here, that he created a cycle in the middle of a cycle right here by selling some of his calls. Once this cycle is complete, now there's a new cycle on top of that cycle, and your new 35-day happens to be 6-5 here. And this is where I think something really interesting happens is, on these 5 days right here, he sells on the fifth and the fourth day of where the highest volume occurs on the stock. And you see a drastic tank in the stock as well. And on the very next day, GameStop does an ATM. And if they're just looking at pure volume and not price, and they're agnostic to price, they're just trying to sell shares without tanking the price, this is a perfect window for them to start selling shares. And they do, and they sell it quite quickly. But this is where you see the very interesting activity here occur of DFE buying calls along the way. In the money calls just about at the same strike of where GameStop estimated their ATM to be completed at an average price. I think they had marked it at $18 or $19, and he bought all the $20 calls. And this created a really strong floor for GameStop to sell shares into. And as you can see, the stock price kind of barely moves along this window, which is extremely odd for such a dilutive ATM at the time. 45 million shares was a lot of shares. Um, so what happens here is, in my opinion, once the ATM is done, he kind of stops buying these calls. He buys a few more the next week. But he, in my opinion, buys 3 million shares here, which would then put him at a total, if we follow this path, of going from 800,000 shares to 5 million shares, plus purchasing about 120,000 calls, which he later gives us an update the day after. I guess it's the weekend here, but like the last day of trading where this call purchase occurred of 5,000 blocks, he posts a YOLO update. And I think that is then where we stand here of like him holding these calls here actually provided a great floor, but there was a cycle already kind of continuing here. So not only did he buy shares, I think, to offset the potential of messing up one of these cycles, but he also gave GameStop a floor to sell shares into, which is why you then see, in my opinion, a run over the next few days here, knowing that this purchase here probably was also internalized, and with the rest of Reddit at this point purchasing a large amount of calls, a gamma ramp was in place, but it wasn't really necessarily DFV creating the gamma ramp this time around. It was him creating the floor. And so you see this run occur, and sure as shit, these 5 days prior to, you see huge amounts of volume, where volume kind of had dried up during this window. And on the fifth day, I guess in pre-market after the fifth day, GameStop does another ATM with even a larger amount of shares this time. And instead of selling these calls and playing the peaks and valleys, what does DFE do? He simply holds. He holds through the entire time. And then on the very next day, on 6/12, what do you see happen with all of those calls that he purchased? you see some weird stuff happen here. You see a lot of, sorry. So I'm going to search by the $20 calls, and we know he purchased the 621 $20 calls. You see a ton of selling in 1,000 block increments. I will say that when he sold these calls, it wasn't as obvious as when he purchased them. Um, I'm going to go for the full week here just to make sure I'm getting this right. So like it doesn't fully add up. In my opinion, these were blocks that were sold. I mean, we could tell that he was selling them during this window because he's the only one that owns such a large percentage of the OI. And this might be just unusual whales not fully catching what occurred here. I'm not 100% sure. I'm going to just double check. You see a ton of activity on these 62021 calls, or these 621 calls, which is basically him selling his entire position here, in my opinion, and then purchasing shares. And we know he purchased them because of E-Trade's policy of that they don't apply premium to an exercised contract. So his, cost basis here at $21 if you were to exercise these calls at $20 strike would have actually dropped him down to somewhere in the middle of $21 and $20. And what we saw was the opposite. His cost basis went up, which means he was more than likely purchasing shares around this $25 to $29 range. This price here was a pretty large run, but he was purchasing um, midday to probably the beginning of the day when we were at about $25. Um, was when he was purchasing his shares, which then this is where you see the most infamous tweet of his Dune 2 tweet where it looks like he's setting a trap. And I think this is him confirming and knowing that this whole cycle that just happened is going to repeat itself. Um, Now, I think something interesting here happens, and I think this is kind of interesting, is that we don't see any activity here um, around this week where we, you know, kind of looks like there could have been some activity here with 621 being a large hype date, but this is kind of outside the realm of where things are kind of currently trending towards. And I think that this potentially will be no run because if you look at what induced this run up here was him buying shares that got internalized. He buys calls and that's when a new run starts. Same for this one, he buys shares, but then also buys calls here with the gamma ramp. This after the second ATM, he didn't buy any shares or any new calls. He just held those calls all the way through this cycle, which is kind of why I think this cycle right here won't actually lead to a run this week. And in fact, I think it's actually something that will lead to a continued downward or flat trading cycle where DFE will be perfectly timed to then buy new calls off of this cycle that he created here, where IV is low, the share price is lower, and that gives him more opportunity to accumulate more shares with his $6 million. Sorry, accumulate more calls with the $6 million that he currently has. Um, and if this were to persist, then you see a peak here towards the end of July with relatively, I would say, low volume trading until we kind of hit this window here of him buying calls, where I think we would still trade fairly flat like we did back here. But this following week, I think, is where you see a potential run start again, where I think he might start to sell a little bit of calls here and buy some more shares to potentially create another cycle on top of this. But ultimately, right at this 35-day mark from his 4 million share purchase would be potentially where he sells all of his calls. We see a lot of volume here around this range. And then GameStop does another ATM. And I think this will be interesting to see what happens here if they do an ATM, if Roaring Kitty buys deep in the money calls again, knowing that he now has two cycles backing him and a potential rip here, where the first kind of squeeze he again, made money off of this cycle. He's the one that profited off of it, or anyone else that was playing options at this time profit off of it. GameStop still makes money off of this situation, assuming the share price is higher than the floors that they've sold into on the prior two ATMs. And I think this kind of creates this then repetitive cycle of like, as shares outstanding get higher, DFV can kind of keep pushing based off how much money he makes on this cycle, pushing that 5% ownership limit, which he's never going to want to get over, because then he'd have to report all of his trades to the SEC, and it could kind of mess up his timing of his trades. Um, and I do think that he wants people to know this, that these cycles are kind of at play, only because of how active he's been on Twitter, and how active he's been on posting his updates and stuff like that. You don't think he's fully showing his whole trade here, but you can see it in the option market. It's clear as day when you go back to April here during that week that this buying pattern, sorry, this buying pattern of options was very similar to the buying pattern, that we ultimately saw during during his purchase of the in the money $20 strikes of 5,000 to 1,000 block increments. In my opinion, it's very obvious. And now you might say, well, why wouldn't they just try to release the shares early? Why would they? Why would they let something like? Why would a market maker let someone establish a potential ramp like this? And my guess is that there might be ramifications for the already existing option chain of them releasing those shares at this time. And they're hoping down the road that liquidity comes into the market in the next 35 days and they can kind of trickle these in without having huge swings in the underlying stock value. But when you have someone start to buy a bunch of calls on top of that, now they're getting scared. And even if they do release it here, there's already a gamma ramp built. And all these calls are going to start to go in the money, and this could still have catastrophic impact, up until the strike expiration of whatever calls are purchased at this time. And I want to preface, I think this can only happen on a stock that is being manipulated by a market maker, and where short interest could, unreported short interest could potentially be over 100%, either whether it's due to swaps or whether it's due to just reported short interest. I don't think this can necessarily happen, with a normal stock. Like, these trades should never create a stock to have such a systematic and predictable price movement. Um, so that's the main thing that I want to cover here. I do think one other thing that's a little bit interesting is you can kind of see something quite interesting in the borrow fee too. If we go back to, and this is available shares to short as well, if you go back to this window where he potentially was purchasing a chunk of shares, you start to see liquidity or bar of shares available to borrow like start to drop off right before this run here. And we know he holds these calls all the way up until this point here, 513, 514. And then when he releases those calls plus an ATM, you obviously see a bunch of shares available to short come onto the open market, which makes sense. There's more liquidity in the stock. If the calls were hedged, they're now released back into the open market, and more liquidity is in the stock as well. You see bar rate drop, very predictable. Um, but this is kind of why I was saying I think this next 35-day cycle, even though there's a large amount of shares available, you still see bar rate jump and the stock price jump, which is why I'm pretty confident that this cycle that he had created within a cycle, um, wasn't actually released until the wasn't actually released until the date back here where he was holding the deep in the money calls. Um, and so interestingly enough, what have you seen since his purchase of shares? You've seen available shares to short go way down over the last few days, and we're starting to get into this dry period again. Um, and the last thing I want to show you here, I think, is actually kind of interesting, is the activity on the short exempt volume. This is typically, market makers ultimately using their ability to short to provide liquidity, which serves its purpose. But if you go to the past here, look at the volume on what was happening with GameStop's short exempt volume. Like, it was fairly low for the most part, prior to April. And then right about the time where, I kind of think he might have purchased. You see some weird spikes here and there. You kind of start to see it pick up really big when he buys his calls. And then it kind of goes parabolic. And in my opinion, this is them, still using their ability to keep liquidity in the market, but also potentially showing their hand here that there's obligations to be made whole here, that they're still shuffling around. And as you can see, even after his purchase, um, back here, these numbers are still really, really high. Like, why would they be this high if there's so much liquidity from all these ATMs now, unless there's another cycle that they're potentially running into here? And again, this is, I think, more hypothetical here or theoretical. I don't know if this is as clear as an indication as it is, I think, the calendar day cycles that are potentially being played here. But ultimately, I think these are good indicators, lagging indicators, to kind of give an idea of potentially what might be happening or what has happened in the past, and then the later effects of how market participants are forced to deal with those potential problems at hand. So basically, what I'm looking for potentially this week is to see large calls being purchased. And if large calls are being purchased in blocks similar to what DFE was purchasing back here in April, I think this is a really strong indication that this cycle that he potentially created here on 613 is game on basically for the 35th to see a first spike here. Um, and going back to the chart, basically what that looks like then is you see it an exact repeat of what we've seen up until the point of him purchasing shares. So you'd basically see a slight little bump when he purchases the calls, then it falls off a little bit, and then gamma ramp induces, and that's when they try to start to release some of the FTDs, but it hits his gamma ramp. Um, and that's what creates this large run right here, on the fourth and the fifth day. If he thinks there's kind of large volume occurring at these times, he's going to start selling a lot of his calls. And ultimately, that's what drove the price down here. The ATMs definitely drove the price down even more, but like what really drove the price down was him unloading all of the calls at these peaks right here on the 13th and the 14th. And so I think you just have a very similar cycle as to what we just saw. But what's going to happen is it's going to have higher lows every single time that this cycle continues to repeat. Which I think is the most interesting thing to see is after two dilutions, the second being even larger than the first, is that the floor seems to have kind of gone up, which is very abnormal for, in my opinion, for two ATMs with a company that technically hasn't given us a game plan, but just has acquired cash along the way. So take this how you want. I think long term this could be a repetitive cycle that keeps repeating over and over until the market participants kind of let this thing run on their own, which I don't know what that would look like or when they would do that. I think that's a little bit more difficult to predict, but I think this is a repetitive cycle that is being tactically taken advantage of by DFE through the fact that market makers are manipulating the settlement of trades and playing off of their own cycle games. So he's kind of in control here. Once he owns the option chain, he dictates where the price goes. And I think that kind of alludes to the confidence that he's had in some of his tweets, and his ability to post his position as well. I think he has very strong conviction of the fact that what he's doing is ultimately, he knows when he's in control and he knows where things could kind of go anywhere. So we'll see what happens here in the next week or so. I'll be interested to see if any unusual activity happens in the option chain. And if it doesn't, I think long term this is still a great play with a company with a lot of cash, and I think it becomes a little bit more unpredictable to see what happens um, after the next week or two here. So that's all I got. Appreciate the time.